My name is Derek Parsons with Parsons Benefits Coach. Thanks for joining me today. I'm just going to do a quick update on the One Big Beautiful Bill Act and some of the amendments it's made to employee benefits plans across the nation. Several of these amendments are really great for employers that are trying to provide affordable benefits plans for their employees. These are attraction and retention tools to keep great employees and make your companies great. So the One Big Beautiful Bill Act, gosh, it's kind of a tongue twister, but that's just what they decided to name it, has added telehealth eligibility to high deductible health plans combined with an HSA savings account. So in the past, if you had a high deductible health plan that met the IRS requirements, you can open up a savings account at your local bank and deposit money into that savings account tax-free. You could also have a TPA that your employer's hired to manage these plans and be online. You get an online portal, wouldn't be like a typical bank. So you see these in a lot of different ways, but you put money in these accounts tax-free. You can use them on anything that's a qualified medical expense, deductible on your health insurance, co-pays, co-insurance, dental and vision, over-the-counter medicine, Band-Aids, feminine hygiene products, allergy medicine. So these are all items that you can spend money on out of your HSA savings account, which was money that was deposited tax-free through payroll. Some employees do it at the end of the year on their taxes and take the deduction on their personal taxes. So there's different ways to get the deduction from this money. But the IRS has said that if you have a high deductible health plan and you have this HSA account, you cannot have any other plan that provides first dollar coverage. So coverage to see a doctor, talk to them about, hey, I got a cough, I'm sick, my knee hurts, without meeting the IRS minimum deductible first. So telehealth usually runs $10 to $15 per month per employee, and it gives them access to a primary care doctor. They call them online or from their phone, and the doctor gets on and says, hey, this is Dr. So-and-so, what's wrong? And they could be in New York and you're in Texas. And but they're licensed, they're board certified physicians, they're licensed to do business in the state that you live in. And that call and the prescription that they send into your pharmacy doesn't cost you anything other than the fee that you paid every month or your employer paid. So you could not have the telehealth program in combination with the high deductible health plan and the HSA savings account. The Big Beautiful Bill Act has amended that and said, yes, now you can. You can have telehealth in combination with a high deductible health plan and an HSA savings account. So great benefit, improvement to high deductible health plans combined with HSAs. HSA money it rolls over every year, turns into a retirement account. You never lose the money. You will find out a way to spend the money. It is a great tool for financing your healthcare needs. So the next part to the bill, which it amends, is access to a direct primary care doctor or a concierge medicine model organization. So direct primary care or concierge medicine would be paying a monthly membership to get access to a primary care doctor. And, these are doctors you would see typically in person, and it's like paying a gym membership. $50 to $100 a month gives you access to go walk in and see a doctor pretty much anytime you want. And the cost for seeing the doctor doesn't cost you any more than the monthly fee that you're paying. So it does not take insurance. They don't bill insurance. It bypasses the entire insurance system. The rationale is, look, we can do business so much cheaper by not billing insurance that we will charge you a monthly fee and then we can give you pretty much all the services we have under our office to you at no additional cost other than the monthly. So if you had a high deductible health plan with an HSA, this would be another proactive service provided by your employer, or maybe you seeked out individually, that could invalidate the pre-tax HSA contributions. The Big Beautiful Bill Act just said now it's okay to have a direct primary care service or concierge medicine in combination with a high deductible health plan and the HSA component. The criteria for this, though, is there is a cap, and the cap is $150 per month. So as an individual, you cannot pay for this service if it's over $150 per month, indexed for inflation. $150 is the cap, and but if it's under $150, you can pay for this direct primary care model, access to a primary care doctor, keep the HDHP, and have the savings account. If you're an employee plus dependents, maybe children or spouse or whole family, the cap is $300 per month. So that is a really, really nice improvement. There's a lot of areas that we work with employers that have employees in that don't have great access to a primary care doctor. And these two, the telehealth and direct primary care, concierge medicine, are two solutions to employers that have problems finding primary care doctors for their employees. The other thing that the Big Beautiful Bill is changing is that if you get a bronze plan at the state exchange, so you have to go to your state exchange and you pick any bronze plan, you automatically qualify for a health savings account. You can open up at your local bank, you can do it online, and you can put money into those accounts tax deferred. If you're doing it personally, you would just take the deduction at the end of the year on your personal taxes. The other thing that the Big Beautiful Bill increase would be dependent care reimbursement. So if you have a plan through your employer that allows you to take money out of your paycheck tax-free, typically it's state and federal tax-free money, and to pay for daycare costs, you could take out up to $5,000 per year out of your paycheck to pay for tax-free to pay for daycare costs. It hasn't increased in many, many years. I think almost 20 years. So probably should verify that. They've increased the amount from $5,000 to $7,500. That's a great change. It just means that you can take more money out of your paycheck to cover daycare costs. If you don't have any kids in daycare or adult, you can even have adult dependents in daycare. Or somebody that has kids in daycare. You all know that daycare is extremely expensive, and this is just one way to pay for something you would have paid for anyway, but put more money in your pocket because you're not paying taxes on that money. There is some small improvements to student loan repayment assistance, but those three items are probably the biggest. The first two, I would say, are the biggest improvements from an employee benefits perspective, and those are great improvements. So that's a little summary on the Big Beautiful Bill Act and some changes that we're going to see probably January 1st, 2026 to our health plans, and I think those are good changes in my opinion. So hopefully that helps. Hope you're having a good day, and stay tuned for more. Thank you.